Boom shakalaka, Bitcoin price hovering just above the 200 weekly moving average. Today's video, we're going to be talking about the most accurate Bitcoin bottom predictor, how it actually works, and what it means for Bitcoin price coming up in the future. You definitely want to stay tuned. What's up everyone, Randall here from Crypto Love. Today's video we're talking about one of the most accurate Bitcoin bottom predictors, and it can also predict the top prices. Before we get into it, guys, make sure to like, subscribe, click the notification bell, come join us over on Twitter at the Crypto Love. Push the like button and let's get into it. Today, fear down to 33 from around 39.40 as the price has gone down roughly 2%. The fear and greed index goes down as well. Bitcoin today at 23,325, Ethereum at 1,691, BNB at 287, XRP 38 cents, Cardano 52 cents, Solana $42, and Dogecoin 6 cents. And if you want to know the top coins today based on artificial intelligence and machine learning, they would be Yucatcoin, Flux, XDC Network, Civic, and RenBTC. And if you want to check out Token Measures for yourself, there is a free trial down in the description. Now, Bitcoin today has just been following this nice ascending path that we've been in right here since the middle of June. We've broken back above the 200 weekly moving average, this yellow line. Hopefully we can hold that. Right now it's roughly around $22,800. If we can find support above there, that is pretty darn bullish for Bitcoin. But that being said, there's this right here from William Clemente. The Puell multiple remains one of the most reliable macro bottoming signals for Bitcoin. This is likely because it's deeply rooted in first principles thinking around miner profitability. So it seems to flag very close to bottoms, oftentimes correlated with the bottoms based on the miners. Now this kind of makes sense because miner profitability does have a little bit to do with supply and demand, and it also is a little bit related to the halvings. Now here's another Puell multiple chart here on checkonchain.com. We can see this graph down here on the bottom with this blue line tells us when we have miner stress and miner profit. So when it's in the red, the miners are in profit. When it's in the green, the miners are in stress. Now coincidentally, these green areas are very close to bottoms. We can actually see underneath the line, so underneath the 365-day moving average, we can see that when it's underneath, well, the miners tend to be stressed, and when it's above, the miners tend to be in profit. So right now we are in one of these bottom situations where miners are struggling, and this often signals a bottom. Not only that, but Willy Woo talks about the hash ribbons visualize miner collapse. Bottoms normally coincide with miners capitulating. Weak miners are bankrupted, adding to sell pressure in a cascade. Ribbon then recovers, and in the green circles on the bottom he shows here, looks like we're deleveraging, and this is about a month ago at this point right now, a month and a half maybe. So right here he says this is similar to what we saw at the COVID bottom, not the full deleveraging that we've seen previously, but we can also take a look at this on checkonchain.com. Now we don't have the full type of deleveraging events that he was talking about previously, but you can see this collapsing very close together here. This the minor difficulty band right there, we're right above it, and this also gives us an idea of when we have strong buy areas and strong sell areas, and we can see it down here in this graph as well. We're not yet down to the strong buy levels on this graph yet, which is pretty interesting. But let's take a look at some more, because we can take a look at the Bitcoin block subsidy models. Now, where we are right now, we are right above the 8 times thermocap. Thermocap is this blue line right here. Bitcoin really only touched it once way back in 2011. But comparing where we are to where we were previously, we were just below here at the COVID bottom. We also broke below this area in the 2018 bottom. There we were still above the 4x thermocap, so that looks like a 6x thermocap. And then previous ones, we were at the 2 to 3 times thermocap. So we are definitely higher, but as you can see, this was the thermocap. Here was 2 times the thermocap. Here was 4 times the thermocap. Well, 6 times the thermocap would be expected, or 8 times the thermocap would be expected for where we are right now. Which brings us to this chart, which I found particularly interesting. If we take a look at Bitcoin miner flows, which takes a look at Bitcoin or miner net spending and miner net hodling. Well, we can see right here that we have a giant hodl wave that just transpired. Let's take a look at the previous times we had hodl waves. Well, there was one right back up here, but there was also one at the COVID bottom, and then there was one in the middle right here and back here. Now, oftentimes these can coincide with capitulation events, but also waiting for prices to get higher, as opposed to when we see the massive net spending, these correlate much more highly with the high prices. Which brings us to this, because we're talking about miners. Miners make more money when Bitcoin price is higher. Bitcoin price is higher after halvings typically, and we tend to have the same trend around halvings. This is Bitcoin days since halvings. We have the halving, initially the price goes up, and then it comes back down to somewhere above break even. This is by far the lowest. The highest was the blue. That was about 12-15% or 12 to 15x above breaking even. This one was about 11 times above breaking even. This one was about 5 times above breaking even. We're just about 2 times above breaking even since the halving. But after it comes down, guess what? It starts to bottom, starts to come back up in time for the next halving. Now, the next halving is less than 2 years away. It's about a year and a little bit more than a half away, around April of 2024. And when we have that happening, guess what? People start to buy Bitcoin before the halving because they want to get it at a cheap price before there's less of a block reward. And you know what can happen with that? We can have something along the lines of this happening, where by 2024, we could have Bitcoin soaring all the way up to roughly $450,000 before finding a next bear market bottom, roughly about $140,000. So that looks pretty exciting, all thanks to the Puell multiple. And hopefully we will find support roughly around $22,800, because that would be the launch pad for Bitcoin to take off to new highs. Thank you all for watching. If you did enjoy it, make sure to like, subscribe, click the notification bell. I will catch you guys later. Have a good one. Love you. Peace.